Hey everyone, it's Mitch Goldberg. You're watching my live stream, Be the Boss of Your Money. It's just a crazy day in stock market land. And just want to put up the thumbnail here, the picture that I use to that you always see whenever I start these live streams. I always like to put the picture. Plus, it reminds me of what the show is all about today. And this is going to be it. How you doing, everybody? You okay? The market was down a little today. It's been down every day. It seems like this is definitely a down week. We've had so many records. Are you feeling okay? You feeling confident about it? There it is. You see that? That's the thumbnail right there. Stock market going down. I've got my pensive look. I'm going to put the banner in. All right, let's talk about the market real quick, and then I'm going to get into the intro. In fact, I think I'll get into the intro right now. Something we've been talking about is deterioration in the lower tier, third tier stocks. That's been a pretty big theme. Listen, when we were hitting lows last March and April of 2020, I was right here. I've got the video to prove it. We're at the lows. Market's going higher. I'm a buyer. The low is in. And I'm not out here to say the top is in, because theoretically the top is never in. If your time horizon is 10, 20 years or more, I don't think you really have to worry today if the top is in. But you do have to worry if you have a goal coming up in the next couple of years. What do you do with that money? Hint, it should be in the market. And I think you have to also understand that if you're someone who thinks that you've made so much money in the stock market and some stocks, and some stocks have been up tremendously in the last year, maybe it is time to take something off the table and do something else with the money. There's nothing wrong with cash. I was just talking to a friend of mine, very intelligent market follower. And he was like, well, what do you do though? Because, cash doesn't keep ahead of inflation. And I'm thinking, well, it's not so much cash keeping up with inflation. I don't want to put it into bonds because I'm worried about duration risk. What are you going to do? You get 1.5% for a 10-year treasury, but if yields go up, you lose money. So that's not a way to go either, but I don't look at cash as a permanent thing. So let's just run the quick intro. We've got a good show. I'm going to fly through this. I already have my storyboards up, if you will. So here we go. Welcome back. I'm Mitch Goldberg. You're watching my live stream, Be the Boss of Your Money. It's all about personal finance so that you could take control of your money. It's very easy to lose control of your money. It's very easy for your money to control you. And we want to make smart decisions. We want to take some pressure off and make decisions that will actually help you meet your goals, that will be aligned with your values. That's what the show is all about. So let's get into a couple of things. First of all, I want you to know I have a guest tomorrow. Her name is Donna LaScala. She is an expert in the area of personal finance for people getting divorced. I know it's not the happiest of topics. Well, for some people, maybe it's a very happy topic. But the point is, there's so much nuance, and there are things that not even the lawyers tell you about that you need to know, from insurance to assets to liabilities. It's really stunning. Okay. By the way, I'm keeping an eye out for the verdict for the Derek Chauvin murder trial. Well, I don't want to watch it live and make you guys sit here, but it's they're done deliberating. They have their verdict, the jury. But they said, okay, so here he's been charged, but they haven't come out with the actual verdict yet. They said sometime between 4:30 and 5 o'clock. So when I see that, I will definitely cut to that. So we finally have a down day. You're watching this. Thank you so much. Your time is very valuable. If you have any questions, ask me in the comments. I love hearing from you. If you're watching this in the replay, the same goes for you. Ask any questions you may have about what you're watching here, about the topics. I'll definitely see them in the replay, and I will answer your questions. It's my favorite part of doing the live stream. So let's take it to the tape. And I'm going to make sure that this screen is big enough so that you can see it. And we're going to cut to it right now. Put myself up in the corner. Hey, there I am up in the corner. All right. So the Dow is down 256. When I made that thumbnail before to say stocks are down, the Dow is down about 356. So it's recovered about 100 points. And look, I don't think 250 points, 256 points is that big of a deal, given that we had a couple of up weeks in a row in the Dow and the S&P. We've been hitting record after record. The market's still up for the year. We're giving some back. Why? Let's keep going. I'll tell you why. NASDAQ off a little bit. S&P off. NASDAQ was off almost 1% yesterday, off almost 1% today. So 100 more days like this will be almost zero. I don't think we're going to zero. Gold was up a little bit. Oil was off a little bit. The 10-year continues to just drift slightly lower. And I want to show you the Russell 2000. The Russell 2000 keeps getting slammed. So down almost 2%. That's the RSK over here. All right. That is the small cap sector, and that's small cap stocks are much more sensitive to the domestic economy than large cap stocks. Large cap companies get a lot of their revenues from overseas. They have different sources of funding, whereas small cap stocks are really businesses that depend on the strength of the U.S. economy. All right, let's take a look at some of the crypto. I always look at crypto now. But overall, little rebound in crypto. Bitcoin was 66,000. It's 56,000. Bitcoin trades over the weekend. That's why you didn't see Bitcoin have a big down day from Friday and then opens up on Monday and trades down. No, Bitcoin dropped on Saturday and Sunday. So Bitcoin trades 7 days a week, 24 hours a day. So that's why you're thinking like, how come I didn't see it have such a down day? And it says it's up when I know that Bitcoin was higher. You're not following it over the weekend. You have to follow these stocks all weekend. Okay. Let's take it to Netflix. Here's Reed Hastings. Netflix. Here's the biggest headline business-wise of the night. Okay. Netflix reports dramatic slowdown in subscribers. This is significant. Netflix is down 10%. Okay, down almost $60 after hours. I'm going to stop sharing a screen and tell you what's going on. All right. So I'm seeing deterioration in the third tier stocks. Let's talk about what first tier stocks are. The FANG stocks, Amazon, Google, Netflix. And we've been talking about this for the last few weeks on Be the Boss of Your Money, the name of this live stream. Go check it out. I wish there was a subscribe button. You could subscribe to my YouTube channel, by the way. I'm Client First Strategy on YouTube. Connect with me on LinkedIn, Mitchell Goldberg on LinkedIn. And you'll see my picture there. I'm doing this pose in the picture. Okay. So I've been seeing deterioration in the third tier or lower tier stocks. A lot of these stocks are not in the S&P 500. So you're not noticing deterioration in stocks like Zoom, for example. Just want to give you a quick look at Zoom. Wait, I want to make sure you're looking at everything that I'm looking at. Okay. Netflix is down just about $60 in aftermarket trading. Whether if you're watching this or listening to this, you could see on the chart where you just listen to my voice, my buttery smooth, made for radio voice. And Zoom got a big upgrade today. Stock is still down, and the high on it is almost 600. Stock is 318 in aftermarket trading. So the stock is down by almost half. So, but you might not notice the deterioration in lots of stocks like Peloton. Okay. Because they're not part of the S&P. So people see the S&P 500 hitting record after record. You see the Dow hitting record after record, but there's deterioration underneath the big averages, like Zoom and Peloton. Peloton was $170 a share, now down to 104. You wouldn't know it though. And what I see happening is the stocks like these going down, and that money has been a source of funds to buy bigger stocks, the top, S&P 50 stocks like Johnson and Johnson and Alphabet, which is Google. So that is very reminiscent to me of the year 2000 when the NASDAQ peaked in 2000. Then we had the tech wreck. Stocks were deteriorating well before we had the NASDAQ peak in March of 2000. You just didn't know it because you were looking at the major averages. And that's what's happening now. I'm not saying we have a crash and the NASDAQ goes down 80%, but I do think stocks are extended, like as of a few days, as of last week, 96% of all stocks in the S&P were above their 200 moving day average. That's just historically super extended. You need a correction to take out some excess. And that's what I was concerned about. And I think we're getting it. I mean, is it a major correction? Is this the beginning of a new tech wreck, like a 40, 50% drop in one of the major averages? No, I don't think that. But I do think there are a lot of stay-at-home, work-from-home stocks that are in the crosshairs of a really of a lot of damage that will either be long-lasting or maybe even permanent. Okay, so let's take a look at the Corona list stocks, and then I'll go back to my screen share. Okay. All right. We're back. Okay. So we just went over Zoom. You see the red here where the mouse is? That red is an indication of how far a stock is down from its high. And there's a lot of red. There's Clorox, Activision, Peloton just went over, Domino's, Campbell's. These are the work from home, stay at home kind of stocks. And that's, I think that's the real takeaway from Netflix. Netflix is known to have big ups and downs when they report earnings. It's not unusual to see Netflix go up or down 10% in after hours trading. But there's always something to take away. And I think the takeaway now from Netflix is that they missed in subscriber growth by a lot. And I think it just reinforces the notion that the work from home, stay at home, pandemic, Corona stocks have seen their best day. That's what I think it means. And maybe it won't mean that next week, but for now, that's the interpretation that we're getting. And if you look at these stocks in aftermarket trading, more down than up. And if I take a look at the FANG stocks, okay, they're all down. Microsoft is down a little. Apple is off a little. Google off a little. Amazon off a little. Facebook off a little. Netflix off a lot. So I definitely think you see a lower opening tomorrow. And maybe this will be the final washout for a lot of these stocks. I don't think so. I think it's time to be defensive. And that's why I've been talking to you about this, day in, day out. Last week I did a full episode dedicated to when times are good, it's time to prepare for bad times and make sure that you are still sticking to your personal finance. So just because the market's up a lot, if you have a goal coming up over the near term, a year or 2 or 3 years, it's time to move some of that money out of the stock market. Maybe not all of it, but don't be the person who thinks you're going to just time everything perfect and you're going to just get out of all of your stocks at the exact high and you are going to be the one genius that did it. Odds are it ain't going to be you. And I'm not telling you it's going to be me. I don't think it's going to be me either. What I am telling you is I look at my client's personal finance and I say, Jim Bob has this in 3 years. Jane Bob's got that in 5 years, whatever. And I make changes accordingly to their portfolios. Sure, if I see an asset class that I think is way overvalued or up a lot, I want to take a little something off the table and diversify or go into something more stable or something different. I do that. But overall, I'm not swinging people's entire portfolios out of cash, then all into the stock market, then all out of the stock market. Your personal finance guides you. For my clients, it's their personal finance that guides my decisions that I make on their behalf. I don't think you could disagree with that, right? I mean, why would you disagree with that when it's a fundamental truth of personal finance? Questions, people. If you have them, ask them, because I love hearing from you. So that's the story today, and that's why the market, I think, is coming down. It's just the reflation trade, the reopening trade has accelerated and run up so much, so fast that for now, I think things are as good as it gets for now. The big miss is this. We all expected a very strong economic recovery in the second half of 2021. But we got it in the first half of 2021. Earnings estimates have been raised so much that it's going to be harder for companies to keep beating their earnings expectations. That's probably happening right now. So that's another reason for stocks to pull back somewhat, to get stocks low enough so that if they do miss analysts' lofty earnings expectations, they could still go up. That's not where we are yet. So that's my sense of where the market is. And I think I'm going to end it on that. Okay. So hope this helps you out with your understanding of what happened in the market today. More important, I hope this helps you understand that the most important thing as an investor is that you have an investment portfolio that you could stick with, not just a portfolio that you think could keep going up and up and up, because nothing goes up and up and up. Trees don't grow to the sky. And just because you have a stock that was a big winner in 2020, past performance is no guarantee of future performance. Have a good night. Be back tomorrow with a guest, and I hope you'll tune in.